Now, if you take a look, you can see that there was also another bull flag setup a bit earlier on, which was here. Okay, let me get rid of this. Again, you can see that the 18 has been tested, and there you go. That's your mini bull flag, right? So that's your impulsive candles, right? Making higher highs, higher highs, higher highs. Again, like I said, impulsive candles don't have to be green, although I prefer them to be green. But as long as you've got this higher high pattern, and then we've got this lower low pattern over there. There we go, and it retraces to the 18, right? And you could actually place a buy order right above the high of that candle over here. The stop loss below there somewhere, and the next candle exceeds the high, triggers the buy order, and that would have been a winning trade as well. So this was also a potential bull flag setup. And again, you can see over here, this is another bull flag setting up, right? So this is your impulsive candles. Again, 1, 2, 3. Okay, this is candle 1, candle 2, candle 3, all making higher highs. And you can see the last candle is a red candle, and that's fine because it makes a higher high. And then it pulls back to a this corrective candle, making a lower high. So this only had one corrective candle, 3 impulsive candles, one corrective candle that again served the 18 moving average. So again, a buy order could have been put right above the high of this candle, right, and stop loss below there, ensuring it's at least 8 pips. And the next candle goes up, exceeds the high, triggers the buy order, and that would have been another trade. So you can see that there were a couple of entry points within this, and sometimes within that trend you could get in and get out and get in and get out multiple times. Okay, all right, so pound yen, this was on 6th of June. Again, you can see this was surfing the 18, surfing, all right, surfing. So surfing multiple times, and again, the more times it surfs, the more confident you are that that moving average is a strong support. And here we have got the impulsive candles. Let me name them. It's basically candle 1, candle 2, and candle 3. These are your 3 impulsive candles, making a high, a higher high, and a higher high. So these are the impulsive candles going up. Then you have got, again, only one corrective candle in this case, right? This is the only corrective candle, the red candle over here, making a lower high, and again, finding that support at that moving average, surfing the 18 EMA. Okay, so once you've got the corrective candle coming to the moving average, again, you place your buy order right above the high of the candle, plus the spread, whatever the spread is, right? So buy order is over here at 14760. Stop loss is right below the low of the candle. In this case, it's 14739. 60 minus 39 is 21 pips, which is way above 8 pips, so that's fine. So we're risking 21 pips. In this case, we have got 1 R is 21 pips. If you go for 1.5 R, there'll be 31.5 pips. So 14760 plus 31, you can put a half if you want, is 14792. So that's your profit target. Okay, and again, it went up, came down, boom, and hit the profit target over here. Okay, and is this a bull flag setup? Yes. Well, yes, in a way. Okay, so these are your impulsive candles going up. Okay, so there's a high, higher high, higher high. These are your impulsive candles, and then you've got your corrective candles. All right. Although this one, no, not really. On second thoughts, yeah. Now I know why I did not use that, because again, this makes a lower high, right? A lower high. Okay. Now, would I start to get in at this point? This is a bit risky because again, you're entering a bit far from the moving average, right? You want it to pull back nearer the moving average. And you can see this next candle over here has already made a higher high. So it's no longer a bull flag. Remember, the flag has got to make lower highs, lower highs, lower highs, reaches the support level, and then you enter the new high. So in this case, it pulled back to support over here. Now it looks very nice in retrospect, but you can see it made a higher high, it made a higher high. So that kind of like it violates that rule that you should make lower highs. You want to see a very nice flag making lower highs. The first higher high is the one that you get in to ride the next impulsive candle wave up. And again, always remember that you want your ADX indicator to be above 25, indicating a strong uptrend. Always check your hourly candles as well to make sure the hourly candles are on an uptrend as well. Another example, pound Aussie. So on this one, you can see it's surfing off the 18 moving average. And then it makes a really strong impulsive move up. So in this case, you've got 1, 2, 3, 4, 5 impulsive candles. Okay, so all making higher highs. That's the highest point, and then starts to make lower highs. So that's your first corrective candle, 1, second corrective candle, 2, and then you put a buy order right above the high of that. Stop loss over here. Next candle triggers your buy order, and you're in the trade. In this case, your stop loss is 8 pips, profit target 16 pips, 1 to 2. Okay, and again, ADX above 25. Check your hourly candles, ensure that they're also on a clear uptrend. Okay, so I see a potential bull flag surfing on the 18 moving average. So I'm going to trade, put a potential trade over here at, put a buy order right above here at 9961. Okay. And a stop loss right below the low of this candle, and it must be at least 8 pips, so 9961 minus 8 is 9953, so my stop loss will be here 9953. Okay, there we go. You can see the spread is about 5 fractional pips. So I'll just put it maybe 9961 and a half. Yeah, 9961 and a half. And this could be 9953 and a half. Thereabouts. Okay, so placing my order. Use a buy stop at 0.9961 and a half, stop loss at 0.9953 and a half. Is that correct? Yeah, that's right. Okay. So placing my order. Now I've not put my profit target yet. I will in a short while. But let me just explain. So what I'm seeing here is, okay, I'm seeing it surfing the 18, right? It's surfing the 18 over here. Okay, so this is my impulsive candles, right? You can see this is a high, it's a high, it's a high. So this is my impulsive candles going up. So it's making higher highs. And then I've got one corrective candle. This is my corrective candle that is surfing on that 18. All right. So I just place my buy order right above the high of that candle plus the spread. So that's at 9961. You can put half a pip as well. And then my stop loss would be below the low, but at least 8 pips away. So that will be 9953 and a half. Okay. So that's my entry price, the green line. My stop loss is the red line. And I will then put my profit target. So again, I can aim for 1.5R or 2R. So in this case, I'll probably aim for, well, yeah, I forgot. Let's check the hourly candles first. Yeah. And you can see at the hourly candles is also on an uptrend, right? 6 above 18, 18 above 50, above 200. So you have to check the hourly candles as well. And it looks like it could potentially go up to maybe somewhere over here. Right, that could be my target. So I'm probably going to target about 1.5 hour. Okay, so that will be about 8 or 1.6 hour. I could target 1.6 hour. That's fine. 8 times 1.6. So that's about 13 pips. So I'm going to click on this. And my profit target will be 13 pips above my entry price. 9961 plus 13, 9974. 9974 and a half. Okay, there we go. Okay, so we're all set. So my entry price, my profit target, my stop loss. So it's not been triggered yet. And again, notice that my ADX is above 25. So it's a strong trend. So let's see if it triggers the trade. Okay. Okay, so following on the trade, you can see what has happened.